So I've got Aditya Khemani from Invesco India, I've got Sameer Raj from Nippon India, and I've got Varun Goyal from Mirae Asset to help you decode how exactly to read the small cap space today. Do you think people are investing more in small caps right now, or are they feeling scared?
So we have two indices, Nifty Small Cap 250, Nifty Small Cap 100. I think they are running at 15-16%, 20-year IRRs, right? Which is absolutely mind-blowing. And we have great small cap fund managers. You have one sitting here, who has delivered 4, 5, 6% over and above. He's done a phenomenal job.
God has been kind, I would say. I always say, small cap fund manager not chooser, they're beggar.
How the next 6 to 12 months can unfold for small caps? Is the situation getting better?
Then I think a lot of fundamentals are in favor of India. So I think only negative thing which happened is the war and related increase in oil and currency and freight rates and all that.
The discoverability of Indian small cap is increasing, right? And we have now such a vibrant economy. They have at least 20 sectors where somebody is trying to find the next big idea.
How are you looking at valuations today in the small cap space?
People think small caps have corrected a lot. But again, as the data we shared last 18 months, there's not been that much correction in the market we play in. You still need to work hard to get companies for a 20% return also.
I'll give you a quicker answer. Any AI tool, let's say you ask for Sameer, they will tell you last 20 years, bull markets, how does it do? Bear markets, how does it do?
I'll actually give you a shorter answer, power of money.
Okay, yeah, absolutely.
Welcome, gentlemen. Welcome to Power Up Money, and very excited to host you and have this conversation with you. So, Sameer sir, I'll start off with you. Of course, you've seen a lot of market cycles in the last, 2 decades or so, and especially with small caps. So, what tends to happen when the market is shaky or uncertain is that people think that large caps will hold up better. So, in this geopolitical tension and everything that's going on right now, where do you think small caps are?
What we have seen now, post this correction and post this bounce back, it's very surprising for most of us that, small cap has bounced back the most compared to large and mid cap. So, it has become now mainstream space, which it was not. They have also improved significantly.
Like when I entered the market in 2005, 251st company's market cap used to be 1,400 crore actually. Today, 251st company, which is the largest small caps market cap, is 34,000 crore. So I think the way people used to think about small cap 20 years back, that is not true today. Today, they are much more resilient actually. But within that small cap also, we can break it up also. Like maybe micro caps, maybe less than 5,000 crore market cap. The last small cap 500th company ends at, I think, 5,000 crore market cap. Below that is that small cap part of the market, which I will say is much more risky actually. And that has been proved over the last 18 months. As Sameer mentioned, that last 18 months resilience of small cap is what we've been surprised. In fact, the small cap index is just down 10% over the last 18 months. Nifty is down 4-5%. So that gap is very, very small actually. And also last 6 months, when we've seen tariff tantrum happen, this Iran war happen, small cap is just down 6-7%. That's why I break it up small cap into less than 5,000 crore small cap market cap and above 5,000 crore market cap spectrum.
Do you think people are investing more in small caps right now, or are they feeling scared?
So I think if we look at the historical pattern, right? If you look at last 20, 25 years, so we have two indices, Nifty Small Cap 250, Nifty Small Cap 100. Both are in existence since 2004 and 5. And if you see their IRRs, right, I think they are running at 15-16%, 20-year IRRs, right, which is absolutely mind-blowing. And we have great small cap fund managers. You have one sitting here, who has delivered 4, 5, 6% over and above, right? So Indian small cap, to my understanding, is a rare asset class, which has given you 20% for 20 odd years.
Do you think the next 20 years could look the same?
No, as far as India is concerned, I think there's been a phenomenal growth story in the last 20 years. And I see no reason why the next decade should be any different from the previous two. If you look at categorization, last 5 years, post-COVID has been dramatic increase. So small cap as an overall market cap has become 5x. From 2020 to 2026, it's 5x in terms of market cap. So the discoverability of Indian small cap is increasing, right? And we have now such a vibrant economy. They have at least 20 sectors where somebody is trying to find the next big idea.
Basically, I think what we're trying to say that returns will be attractive. Let's not set expectation of 20%, but I think it'll be reasonably good return compared to any other asset classes. That's what Indian small cap has that kind of potential.
Mostly
kind
the different
it should be there.
also.
Like if past experiences like that, and there is no way the way India is growing and the way small cap space is defined and the kind of companies and sectors are coming, the chances are very high that you'll get very good experience.
So how are we feeling about valuations now? Like, of course, there are two parts to the valuation equation, right? I mean, there's price and there's earnings. So I think price largely has been corrected in the last, 1.5 years. But if the earnings don't improve, then the valuations will again seem steep. So how are you looking at valuations today in the small cap space?
They're like 5,000, 10,000, 15,000 crore market cap. So they're small in the life cycle actually. So I think just looking at FY27P or FY28P might not be the right thing to look at. One is that. And secondly, small cap, we are talking about the attractiveness of this space. This is a space which will do very well, should do very well over the next 5, 10, 15 years. So you cannot just look at what is the next year P multiple and then say, make a judgment company is cheap or expensive.
So last year when we were launching a small cap fund, we did a cut of the index, right? So let's say Nifty Small Cap 250 as an index. So it has 35% of the index, which is, or let's say was trading at 50p, and there was a 65% of the index, which was trading at 20p. So that was the gap. And clearly there are some, you can say, sunrise sectors, high growth sectors. So when you're creating a fund, like any of us would be doing, you have to be mindful that these are the sectors which are most frothy. Of course, you cannot be avoiding them because there's a lot of growth coming in, but you need to be a little mindful about the sustainability of the growth. The remaining 65, which is your pure cyclical Indian, let's say a bank, a NBFC, auto, those kind of names, fairly reasonably valued by and large. And therefore, there is enough to kind of pick. Like he said, there are pockets of fraud, and there still are, despite 18-20 months of correction.
So earlier, in the correction, we were expecting, that we'll get some single-digit Ps and all. I think those days are behind now, because Indian markets are quite evolved market. The kind of flows which are coming. So even in corrections, I think if you're waiting for those kind of corrections or valuations, what you're waiting in the past,
going to happen.
I think that doesn't look like coming. At least in this market also, we had a very tough market, but valuations have come off, but they've not come off to those attractive levels which they used to come in the past.
How has the landscape changed today? What has really changed in the small cap space? Like, of course, Aditya, you were speaking earlier about the fact that even the small cap companies are much bigger now, and of course, far more resilient. But of course, you have been managing, small cap funds for a few years now. What other things have changed in the landscape? Are there other things that you have to look at now when you're evaluating a small cap fund? What has happened?
So basically, I think confidence of India and Indian entrepreneurs, Indian investors, that's really gone up kind of. So when you're confident, and even I think there is generation change in the entire. There is a huge level of professionalism now, and most of the companies now they realize that market cap is very important. Most of the companies, and that forces them to behave in terms of certain governance, the way they want to communicate and all. So I think there is a sea change in that sense. And what we've seen is that in many companies there is generation change. So in many companies, the new generation has come, which is studying in best of the colleges. They understand the importance of market cap. They understand the importance of communication. So I think all that thing has made a lot of difference.
If I look at my own fund management experience in the previous decade, right? So let's say 2015 or 18 or 20, pre-COVID, life was very different. And I would say easier. You pick a few banking names, few consumer names, one or two IT, one or two pharma, and you would outperform, right? Because only a narrow part of the economy was doing well. But if you, post-COVID, suddenly you have a manufacturing sector, a lot of new economy, new age, new energy. And today India is trying to we were only a services-focused economy. Now we want to have a manufacturing. And the world is going through a lot of technology change.
What is the on-ground reality right now of different small cap sectors? Like, how have the geopolitical tensions and, the war situation impacted different sectors? Any insight on that?
From a pre-war, we were looking at almost 30% kind of earnings growth in FY27 for the small cap space. And this comes on the back of almost 2 years of almost zero. FY24 to FY26 is almost a flat kind of earnings growth. And on that base, we believe this should be a very good year. Of course, post-war, there will be some tinkering. Maybe we'll need to kind of reduce it by 4-5%, but it still comes down to a very, very healthy 24-25%.
See, most of the time, listed companies may not give you the correct picture. So I was a little surprised. So when I met my neighbor in the lift, and I just asked him, what is the impact of this, all this war and like currency and all this on your business? So he said, my business is down 70%. That took me really by surprise. And he was very confident they will come back. It's very temporary kind of. So wherever I think that there is a high dependence on oil-based raw material, entire this thing, or there is a currency, this thing, if you are related to currency and where you high imports, so those will be. or you're dependent on very, very narrow supply chains, where people are really taking advantage of the shortage situation and checking up the prices. So I think those are the companies where we'll see very sharp impacts.
Like, how do all three of you look at churn? What is your perspective on that? And what are the signals that you keep tracking after which you decide that, okay, now it's time to exit the stock? And is it related to valuation? Is it according to market sentiment? What are your drivers for selling?
3-4 things are very, very important actually. I mean, from a quantitative point of view, what is our top line growth? What is the EBITDA growth? What is the PAT growth? What is the operating cash flow? And whether a business is reinvesting in the growth. Because again, from a small cap lens, reinvesting in growth is very, very important. Because in case a company doesn't invest in growth, then what will happen 3 year, 5 year later? Like, I mean, standard like IT sector has taken a lot of beating recently.
Your strategy is low churn. Like, if you have
Generally,
decided to
I
invest
mean,
in a stock, then most likely you will.
Generally, churn ratio will be around 25-30%. Maybe 10 years back, I used to see churn as a negative. Churn is high, which means you are a trader or a this thing. But one thing I've realized, there's a healthy churn, there's an unhealthy churn.
So, does managing a small cap fund demand a lot of patience? And would you say it is even more than, let's say, a large cap or a mid cap fund?
I think investing in small cap requires more patience. Managing, of course, requires patience, but investors require much more patience. And I think, fortunately, India, I think what has surprised me over a period of time is the maturity of the retail investors. When we are having some of the best global known investors like FIIs, so they are selling. A lot of HNIs are selling. Where retail investors are keeping faith, and in fact, in a tough time, they're showing faith. I think the numbers, SIP numbers and inflow numbers of March, hats off to retail investors.
Like, from a rigor point of view, I think small cap definitely requires much more rigor because it's a much more broad-based index also. Like in a large cap, maybe you might not need to visit a lot of their plants and those things. But in a small cap, I think maybe a plant visit and
it's
those
must, I
things,
think.
channel check. It is very, very
The
important.
amount of work
actually.
you do before
So
you buy
far more
is something
active.
which saves. Yeah.
Far more active, I would say.
And also, I think there is
small cap space.
I say that there's the joy of stock picking, right? So you get a kick. At least when you meet some of these really dynamic promoters who just last 20 years have slogged and first generation guys and really made it, big. So that's, I really, always interested, enthused by their stories and try to understand how they did it, right? So I think that's the best part of my job. So of course, while you have to, always
No,
be.
it's very interesting. So, you get to meet like tomorrow's big guys, and you're meeting them really early enough and, watching them grow in front of your eyes. So it's very, very satisfactory. And I think what you
I'm
get
sure
to know,
a lot
you
of
get.
small caps that you invested in are now like mid caps or
mid
large
caps
caps.
kind of. And also, most of the new industries, they come from small caps. So, you are in touch with these changing trends much earlier.
I wanted to ask you, Varun, the last 18 months have been difficult for the small cap space. And that is exactly when you decided to launch a new small cap fund under Mirae. Was the timing strategic?
We always wanted to do a small cap fund. And it so happened that for a long time, they were on the lookout for a new fund manager. So I joined the company 2 years back. And the first 6 months went in background work and all that. And then we decided. And of course, that time market sentiment was adverse. And we thought that is normally the best time. We are not launching a small cap fund for 1 year, 2 year. We're launching it hopefully for next several decades.
And of course, the fund has performed extremely well. So do you think the fresh slate helped you because you were able to deploy the money at good valuations?
Yeah, so absolutely. So in fact, we had a lot of time to identify the right ideas and then buy them also at a valuation which was a little more sensible as compared to what it was, let's say 1.5, 2 years back. And I think, of course, now the journey kind of continues, but definitely, from that point of view, and also I think Samir, the size point that he mentioned, that size also makes a difference.
No, but incredible first year for Mirae.
Thank you so much.
But that also brings me to, of course, Nippon and Invesco in a very tough period. It has, both the funds have outperformed the benchmark by a very significant margin. What kind of portfolio calls or what kind of things do you think helped you outperform the benchmark in this period?
I think from the start of 2024, one was noticing there are a lot of frothiness in a lot of sectors actually. So one big call we took at that point in time, I think helped us was to reduce our industrial exposure drastically actually. So I think I will say slightly lesser concentration on the overrated sectors. That was one thing. Apart from that, some of the calls went right actually. But overall, I will say the process is where, not just again a small cap fund, because as I said, small cap is not one person can manage a fund. You need a team of good analysts across, which are the key actually from that point of view. And we at Invesco have a very strong research team.
Samir, what would you say?
So we, as a house, we were very cautious on entire markets and more so on small cap. So, we reduced our small cap exposure to bare minimum. That's one thing we did. Then we don't take very aggressive cash calls. So, we moved quite a significant money. We increased our cash position compared to what historically, maybe 3 to 5%, that's just only. And we moved good money to large caps also. But to my surprise, some of my large cap exposures, they're not done well. Like some of the large banks, some of the large FMC companies historically, they're supposed to defend. So they also fell as much. So it didn't provide that much effect. So fortunately, I think the quality of the portfolio also helped.
So, of course, with all three of you, we have very different investing styles, very different AUM sizes also. Like, of course, Mirae is, a very young fund. So it has about 3,000 crores of AUM. Invesco is at about 10, 11,000. And Nippon is the behemoth with, I think, about 65,000 crores of AUM.
Across 70,000 yesterday.
Okay.
So
How does it feel to manage a small cap fund that big, Samir?
Yeah, so it's tough. See, I think tough in the sense, 1% of AUM is 700 crore. Suppose if you find an idea which you think will double the money, and if you're able to buy 700 crore worth of stock, then it will get 1% alpha. But at the same time, like when you're having large size fund, we are able to really create a diversified portfolio. So 250 stock diversification is a very big diversification in that sense. So I think when you're running such a hugely diversified portfolio, the only way you can create alpha or performance is that you have to continuously bring sectors and stocks, which are doing well in the top 25, top 50. And I think the most important team in this case is a dealing team, because they have to really execute those trades, buy and sell order which you give.
But how do you make sure that your best ideas get high allocation?
So we have to try. So see, in small cap, I always say, small cap fund manager not chooser, they're beggar. so we have to take on that day whatever is available and create a position over a period of time. So if I like some company, I may get only 50 crore worth of stock today. You have to wait patiently till I get those opportunities. I always say, to invest in one small cap company, you have to do work on 4. Because the other 4 you may have worked on it, but you may not get enough stock in that. But that effort doesn't go waste. You're creating your opinion about those companies.
Because things change at a much faster pace in the small cap space, right? I mean, let's say that you wrote off a company, a few months ago, and now it's doing
very
better.
Fast, so you miss those.
So
you have to be really agile. So on off late, there was one telecom company which used to be very significant part of the portfolio, the optic fiber company. It did very badly. We got tired of, and we sold and we closed it. And now that stock is like double, more than double in less than 6 months. So, so you have to be really on your toes and looking at the opportunities, and never be too opinionated about something. You have to be really open-minded.
Always, wherever I go, this is one question which comes up, that there are so many stocks or less stocks, what is the right answer? So in my view, there is no right answer. It depends on your comfort.
Yeah, there are many ways. It's there are many ways of reaching God. That's like many ways of reaching the performance.
No, but he's done a phenomenal job. I think from an outsider, I mean, what is
Absolutely.
I mean, so I think hands off. So
God has been kind, I would say.
No. I think that's you being very humble. But
so I'm also thinking that when the fund size becomes as big as yours, what will the
as you walk, I think you'll get the way. So we never thought, that. So normally, as you start walking, you'll get your way.
So Samir, you've also gone on record to say that, with the small cap fund space especially, investors can also have let's say 2, 3, 4 different small cap funds in their portfolio. How should they look at this kind of diversification? Let's say, should they look at AUM? Should they look at, the fund manager style? Should they look at, of course, value investing, growth style of investing, stuff like that? If, let's say, I want to invest in 2, 3 different small cap funds, what kind of diversification should I look into?
There will be times when every fund manager will have certain style bias. So there will be certain times when certain style will do well, kind of. So depending on, I think, first of all, your comfort level, what you want to achieve as objective.
Look, over a longer term, whether it's a 5-year, 7-year time, 10-year time frame investor, if you look at most funds in the market, their return will not be 0.5, 1% difference than each other actually. So I think at times we overemphasize that this fund manager has done this and that fund manager has done that actually. So I think that, so if you're long term, 5 years, 7 year, 10 year, reasonably pedigree mutual fund. Just he should be comfortable with their style philosophy actually. It should not be that in some part of the market they are behaving like value investors, some part of the market they are behaving like growth investors, chasing the fad. That should not be there. In cases fund house has some ethos, some style, stay true to it, then you create a portfolio of 3-4 good small cap funds actually with some style diversity.
I'll give you a quicker answer. So if you just go on chat GPT, just go on chat GPT and you knight the names, right? So let's say somebody mentioned 35 fund managers. You can look at what are the funds which are doing well. Each of them actually, any AI tool, forget just chat GPT, they will give you very precisely. They are so updated about, let's say you ask for Samir, they will tell you last 20 years what has been, whether he's consistent, bull markets, how does he do, bear markets, how does he do. That level of granularity is there. They will say this is the most consistent fund in the market. They will say this is the new fund but doing very well. So we want some kick, go there. They will say this is a growth style, this is a value style. So a very simple AI tool.
I'll actually give you a shorter answer. Power up money.
So absolutely.
That's a good one.
Absolutely.
You can see which fund is doing well, which is consistent, which is more volatile.
Yeah, absolutely. So tech can really help.
I mean, you understand that everyone wants to know what could happen. And of course, with 3 experts sitting here, they would want to understand your perspective on, how the next 6 to 12 months can unfold for small caps. Can they expect, better returns? Is the situation getting better?
Maybe, from my point of view, how we are constructing the portfolio, like if we take a 3-year bucket, next 3 year actually, mid-teen return is what, look, even though telling return is very, very difficult, it is based on what is the earning growth you expect of your portfolio and whether you know that this stock is expensive, starting P is expensive or not, because all of that PE frothiness has gone away. So I will say that maybe stock price return could follow the earning growth pattern actually. We think that 15% plus compounding is what I should expect if we take a 3-year time frame. In case it's more than that, that is a bonus.
I think only negative thing which happened is the war and related increase in oil and currency and freight rates and all that. So, taking a view that war will at least come towards the end or some solution will be found, then I think a lot of fundamentals are in favor of India. A lot of companies which historically have been outsourcing from China, so they're really worried. The way geopolitical situation is evolving, I think they want to have very clear alternate sourcing base, and India really provides a very good stable opportunity. So that way there is some very good opportunity.
Is it a good time to make a lump sum investment in small cap funds because valuations are attractive, or one needs to do SIPs only? Would that be the recommendation?
Small cap, we are still not sure how the things are going to go global. So things could still be volatile after bounce back. Now once the market digests the bounce back, there could be a reality. And I think important thing to watch is the supply of paper. If supply of paper again goes up, then that has potential to destabilize this run, kind of. So I think SIP is still the best way in investing in small caps.
Generally, would you ever recommend doing lump sums in small cap, or would your general recommendation would also
No, so there's a good time. So whenever you get good correction, I think as you rightly said, like to the end of March, there was some attractive valuation, but market has bounced back too fast. 15% in less than 2 weeks is a good run.
I'll just add our stance last year was, if you wanted to put 100 rupees to work in calendar year 25, please put 50 rupees now and 50 you spread out over the next 6 to 12 months. That was the recommendation whole of last year. Our stance now is, if you want to do that, 75% now, and the remaining you can spread out. So we have kind of become more aggressive from a deployment point of view.
And why is that?
Because we believe that finally we have come to the end of the earnings drought. Right? So if you see the third quarter itself, small cap earnings were actually pretty robust. So the cyclical recovery that we were waiting for 18 months has already played out. And even if, let's say, 1 or 2 quarters, we have some disruption because of the war, our sense is this will be a more sustainable bounce because, as Samir mentioned, economy is very well stimulated. And there is no demand destruction. There is only supply shocks that we receive because of this war. And therefore, we believe it is time to be much more constructive on small caps.
Is there ever a situation that you would tell investors to avoid small caps entirely?
Small cap is a very mainstream category actually now. There are a lot of companies on the small cap side. If you take again electronic manufacturing, a lot of companies on the small cap side. If you take a lot of chemical companies, barring 1-2 large companies, there are a lot of companies on the chemical side. If you look at auto ancillary, most companies are small cap. If you look at industrials, most companies are small cap. If you look at logistic, there's no mid cap, large cap. All companies are small cap. If you look at building material, So there are so many sectors where you only have small cap. So in case you have to participate in the wider economy, I think small cap is a route to go.
So what would you say is harder, explaining underperformance or managing expectations, during euphoria?
I think during euphoria, the most difficult part is to say no to a stock or a sector which is doing very, very well actually. Because which means that if you do a lot of those things, which means some of the areas which are doing very well in the short term, you will not participate actually. So I think in case you do your work and then you base a decision of not participating somewhere, I think that should reduce your anxiety. And
So sometimes underperformance is by choice, right? So then that can be explained. But euphoria is like market thing, which becomes very difficult to explain. So
No, I hear you, but I also used to think that investors know now we have enough data in the last few years to say that markets always bounce back, your returns will be good. People know that. And yet I see a lot of sentiment now that the markets were not doing well, and of course we're also connected to a lot of customers through our app and through our content. People were feeling very anxious and people were not investing. People were saying that this is a good time to just stay away from the markets, let them come back. You never know how long the war will last and everything, right? I mean, there is a lot of anxiety. Anything to them, would you say?
So I would just say that every journey is unique, right? So I think the biggest problem happens when we are like looking at what is the friend or the neighbor, because his starting point, his expectations, his cash flow, his or hers could be very different.
just one thing to add, don't borrow money and put into the markets. I think as long as it's your own money, that will not give you as much of heartburn. But in case you've taken a loan or something, then you will automatically start calculating that
It's
portfolio.
actually more common than I thought it was. A lot of people do borrow money to,
Yeah,
invest
I
in the
think
markets.
that is something one should not
and
do.
again, I think market is not a fixed income product, and which is not expected to give you the uniform return across the. So what 20 years CAGR, there would be some years where you would be minus 30%, there will be plus 80%. So it's a combination of that journey which over a period of time has delivered that numbers.
On that note, I think we should bring this conversation to an end. That was extremely insightful and very helpful. Thank you so much for your time, all three of you. I think hearing the perspectives of three different fund managers on the small cap space during this time is going to be extremely useful to so many people. So thank you for making the time, and I really enjoyed the conversation.
So thank you for having
you
us,
so
and
much.
thank you
Thank you
for
for
very,
having
very
us.
interesting questions.